Dushman. Hello everyone, my name is Rabaa Fatima Aga and I am a student of Vidyalankar School of Information Technology, Mumbai. I am also a member of Enactus, the management club of VSIT. So today, I will be talking about the G7 taxing, don't worry, not you, the multinational companies. So what is this all about? The G7 advanced economies secured a landmark deal on taxing the multinational companies, as per which the minimum global tax rate would be at least 15%. So, what is this G7? G7 is also known as Group of Seven. It is an intergovernmental political forum which consists of Canada, France, Italy, Germany, Japan, the United Kingdom and the United States. So, what are the decisions taken by the G7? The G7 signed the agreement that the multinational companies would have to pay taxes where they operate. Another decision in the agreement states that the corporate global minimum tax of 15% so that the countries can avoid undercutting each other. What is corporate tax? Corporate tax is a tax which is imposed on the net income of the company. Moving on to the other decision. The ministers have agreed to force the multinational companies to declare their environmental impact in a more standard way so that the investors can easily decide to fund them or no. This agreement will be discussed more in detail in the meeting of G20, the financial ministers and the central bank governors in the month of July 2021. So, how will it impact the firms like Amazon, Facebook and Google? The agreement in the other words states that the multinational companies would not have to be paying taxes only where they operate physically, but also have to pay where they are making profit in the online presence. However, a part of the agreement states that the country would have to revoke their respective digital services tax after the imposition of the common global corporate tax. Although it is being considered that the companies like Google, Amazon and Facebook would have to pay a higher tax rate if the proposal is implemented. Did you know, guys? Rich countries have been struggling to pay for years to raise their revenue from large multinationals such as Google, Amazon and Facebook, which often book profits in jurisdictions where they have to pay little or no tax. Big people, right? So, you must be thinking, why so hasn't anyone stood against this decision? Not possible. Yes, they have. Like Ireland, which has a tax rate of 12.5%, has come out against this global minimum tax, arguing that it would be a disruptive to their economic model. Now, an important question that may arise in your mind. Where does India stand in all this? Well, talking about India, as taxation is ultimately a sovereign function and depends upon the needs and circumstances of the nation, the government is open to participate and engage in the emerging discussion globally around the corporate tax structure. India is likely to benefit from this global minimum 15% corporate rate tax as an effective domestic tax tax rate is above the threshold, and the country would continue to attract investment. Did you know, guys? Indian statutory corporate tax rates were already slashed from 30% to 22% in November 2019 and from 25% to 15% for new manufacturing companies. Well, now just the decision has been taken. Key details still need to be deliberated upon. More nations must sign on. According to the report, the implementation of this would take years. Thank you for listening, everyone. We'll see you soon. बोले तो फिर मिलेंगे.